Welcome to The Riff, where writer and investor Bern Hobart and I discuss the major inflection points caused by technological change. Our weekly conversation covers the obvious and not so obvious ways in which markets and businesses will adapt as a result. Let's jump right in.
Well, Bern, first I wanted to talk about xAI. How should we think about Elon's fundraise? And you had an interesting take about it when you unpack that.
Yeah. So xAI has apparently raised $6 billion. I don't know if it's been officially confirmed, but apparently it was at like an $18 billion valuation, which is, a lot even for an AI company, and even for someone with Elon's track record, it seems like a lot of money.
It's not 7 trillion,
right? Not yet. We'll get there. And when I was thinking about this, the thing that came to mind was actually the idea of capital structure arbitrage, which is like this strategy where you look at all the different securities that a company has issued, and you basically ask yourself, does the price of this bond make sense in the price of this stock, or does the price of this warrant make sense in light of the price of this bond, et cetera? And what you can do is you can find cases where there are these internal inconsistencies where you're not actually betting on the success or failure of the company, you're betting on individual slices of the capital structure. And you can do that. You can say things like, okay, this company is actually really high variance, so we want to bet that the bonds will go down, but we also want to get buy warrants on the stock or buy options on the stock because we think that if it doesn't fail, it actually succeeds spectacularly. And so you want to bet on both of those at once. And, it's a nice little hedge. And then there's kind of wonkier variant on that, which is you look at a group of companies that are closely related, like maybe there's overlapping ownership, maybe one set of companies owns a piece of another one, or they do business together and they also share board members or whatever, like basically messy corporate governance situations. And you basically say, okay, we assume that this overall cluster of companies gets some return, but we also think the return is probably going to get distributed to particular businesses within this set of companies. Usually it's like whichever one is majority owned by whoever's running the show. So like a lot of money has been made in the Liberty Media companies by not just buying them, and that over long periods they've been well. Recently it's been trickier, but a lot of the money has been made from trying to figure out, okay, of these companies, which one is management actually betting on and which one are they spinning off into a tracking stock because they just don't care that much about it and they want someone else to own it. And someone wrote a piece on this a while ago, that if you had bought the original Liberty company, so telecommunications, before the Liberty entities even had that name, if you bought that and held all the spun off stocks and whatever, you would have done well. But if what you did instead was you always tried to match what John Malone did, so when he spun off, so TCI was a cable company, and it had some content investments and then some actual cable, like physical cable infrastructure investments. And at one point the content stuff got spun off, and the spinoff also involved issuing a lot of warrants on the content piece of the business, and John Malone bought a lot of those warrants, and that's when he went from being like well off cable executive to among the richest people on earth. And so the returns from doing exactly what he did were a lot higher than the returns from just buying the full set. And I think with something like Elon Musk's companies, it's not that they're doing a lot of business together. Like maybe he will find some excuse for SpaceX to do some, like to buy the Twitter fire hose or something like that. But like there's less of that, and there's more of just like shifting labor around, having engineers from one of these companies spend a week or two working on solving a problem for another one of these companies. And so you can sort of view xAI is like the equity slice of that, where it's probably the one that Musk has the largest percentage ownership in, and it's also the one he's just paying more attention to right now. And so you sort of bet that you're like, part of what you're getting when you underwrite that $18 billion valuation is that there is like some wealth being transferred from other Musk companies to this one. And that can be done, like it could theoretically be done in a way where everything is like above board and straightforward, and the CEO of this company says, like, we have this this team and this capital, and we're going to deploy the people and money wherever it gets the highest return, and eventually everything will work out for everybody. Like that has been done. If you look at the chart of of Warren Buffett and Charlie Munger's investments as of, I think, the late 1970s. It's also this ludicrously complicated thing where they own pieces of companies, they own pieces of other companies, and blue chip stamps had been an actual operating business and had turned into more of a holding company, and there were like different ownerships of different businesses, et cetera. And it actually got to the point where the SEC got involved. Like they thought this was like, there was no reason to run a structure this complex other than to move money from the external shareholders to Buffett and Charlie, and like that doesn't seem to have actually happened. In fact, there was a case where Buffett, I think Berkshire Hathaway owned a bank. Banking regulations changed. They had to spin it off. And I think the arrangement was that shareholders could elect to take shares in the bank and Buffett would just take everything that they didn't. So like that's a case where it's by design just not something where one set of shareholder, like where the controlling shareholder wins and everybody else loses. But like that, I think that structure basically evolved because there were all of these companies that were trying to deploy as much capital as possible at any given time. And so whenever there was a good investment opportunity that required a specific chunk of cash, it was just not necessarily clear whether that would come from like Berkshire Hathaway or whether that would come from blue chip stamps or whether that would come from Wesco, the bank. There were a different bank, but yeah, so like lots of different moving pieces. Can be done in an above board way, can be done in a less above board way. I don't think Elon Musk has a ton of respect for corporate governance or shareholder rights and things, but I think he has like enough respect to know that you can play some games with that, but you shouldn't take it too far. I would not be a buyer at 18 billion for xAI, but nobody asked me, so it's an entirely theoretical concern for me.
Flash forward a few years. I mean, like compare this with what do you think the odds are of what they're trying to do actually happening, or them being a major player alongside Anthropic or OpenAI or et cetera?
That is a really tough question. I kind of go back and forth on whether the world needs maybe two AI companies, one of which does everything we need, and the other just keeps this company on its toes, sort of like a Google and Bing, and like Google versus Bing or DuckDuckGo or whoever else. Like, that is one dynamic. But also, training these models is extremely expensive, and everyone is aiming for a slightly different set of outputs. And it's unclear to me, like how much you can change the model after the fact, like how much of the additional training is just like this incremental cost, and how much do you just have to go back and retrain the full model. And if it is the case that there are some fundamental changes where to make those changes you have to retrain the full model, then we can have this case where, because there is such a long lag between deciding to start training it and actually having a finished product that customers can use, that you'll just have multiple companies that are each putting out this gigantic investment in the next great model and launching it at slightly different times and getting slightly different kinds of distribution. Twitter is not it is an amazing distribution tool in some ways, but it's hard to get people who are on Twitter interested in things other than scrolling their feed and interacting with tweets. So maybe it is the equivalent of like having a privileged ad buying position. So that might be worth like 100 million plus a year in terms of the expected value of being able to just have xAI products distributed through Twitter. But it's not as transformative as, say, being able to distribute Gemini through every Google search query that could conceivably have an AI generated answer. So I'm not incredibly optimistic, but betting against Musk has historically been just a really bad decision. So and it's actually kind of unclear why that is. Like one version of the story is that he is just like a technology genius and he always sees around corners and knows what the next big thing will be. And I think that's like, that's more true of him than it is of the average person, and maybe more true than it is of the average big tech CEO. But I think the other factor is that Musk does seem to be just really good at motivating people to work incredibly hard in bursts. And so really, if you're asking like to answer the question of whether xAI actually works out, you partly have to answer the question of to what extent are advances in AI going to be driven by like everyone just being in lockdown and sleeping in the office for a couple of weeks while they finalize something, and to what extent is it other factors where you can have like a more human friendly natural cadence of work?
Yeah. And if you were advising Elon, and Elon came to you and said, "Hey, Bern, like I know that I didn't get a chance to have OpenAI as a part of Tesla, like I wanted. Like, should I do this?" Um, would you say no?
Well, I would be biased towards just fun maximization. Like it is more interesting to have more large, well-funded AI companies that have different views of what the future looks like. And it's also just more fun for Elon to get into interesting corporate governance situations. So in my very biased opinion, yes, you should do it. I think to actually answer that question, I'd want to know more about the investment case for xAI. Like, what is it that OpenAI either is missing or just structurally can't do? Same for Anthropic, and to the extent that all of these companies are limited by some factor, like is it actually a good limitation to have? OpenAI and Anthropic, they both talk a lot about safety. I think Anthropic, like it's much easier to make the case that Anthropic takes it seriously than it is that OpenAI does right now. And Elon seems more skeptical of that. And so I think the question is like how far would he want to take those things? I've always felt like one of the reasons to be less worried about AI is that the bar in terms of capital and competence required, like the capital and competence bar required to create things that actually represent an existential risk is really, really high. And so the people who can do that tend to just be very competent people. And so as long as there's like some general factor of competence that also extends to safety, you're in a good situation. If there's some general factor of competence that actually trades off against safety, like the people who win the fundraising race and win the model building race are the ones who cut the most corners, then that becomes a much dicier proposition. But I didn't really think competition is healthy, and competing to build monopolies is a very worthy endeavor. And it's also possible that we'll just have multiple categories of models that, maybe xAI is working on some category of model that is sufficiently different from GPT-4 or from Claude that we can't really directly compare them. We have to come up with a new set of benchmarks. And in that case, that's great. It's just a new axis on which we can improve technological capabilities, which is almost always good news.
Yeah, it's well articulated. Let's segue to BuzzFeed. Vivek Ramaswamy has just become, I believe, the second biggest shareholder in BuzzFeed for some reason. Why don't you reflect on, if you're Vivek, why do you do this? Is this the right move? And what do you expect to happen?
Yeah, so media companies, like a lot of businesses, you can value them based on the future cash flows of the operating business, and then you can value them as just an asset play. So, you're looking at, say, a big office building, and you calculate the net present value of future rents minus the operating cost of the building, and you figure out, okay, is this actually, like what is the value of this business? And then you can also figure out, okay, if we spend a lot of money on rebuilding something, and we also got all of our permits in order, and we waited a long time and converted this into a residential building instead, like would we actually get better returns from that asset then? And I think my understanding is for the majority of commercial building, like for most office buildings, like there's not really a direct way to convert it. Like it's going to look like an office, so like it's an expensive proposition, but you can think of it as an asset play. You can just say, like, if we value this company as a certain amount of square footage in Midtown Manhattan, or in somewhere in San Francisco or whatever, like is it worth more as that asset than as whatever the current operating business is? And with media, you have a special version of that, which is if the business flips from being slightly profitable to slightly unprofitable, just like structurally, it takes slightly more, it takes slightly more people who are underpaid English majors who are cranking out memes and aggregating stories and reposting Reddit stuff. Like if that generates slightly less revenue than it costs to do, then suddenly your business is actually worthless. But there's also the influence component, which is closer to an asset. And rich people do sometimes buy influential publications because they want their views to get out to the people who are reading it, or like I think more generously, like they view this as economically non-viable but socially useful, and so the New Republic is going to get whatever check it needs to keep publishing what it's doing. And the Atlantic is kind of in a similar situation. And I think BuzzFeed, like it is a way to reach a no longer quite so young demographic, but it is a way to reach millennials. I'm not sure how many of them would be especially excited to see lots of exactly what Vivek once published, but maybe there are ways to like slightly tweak things. And also just media outlets, sometimes they can have more durability as just an institution than as an institution with a particular point of view. So when I wrote about this in the newsletter, one of the examples I cited was the New York Post, which was like, it was like the butt of jokes about bleeding heart liberal media 50 years ago, before Rupert Murdoch bought it. So when people like the New York Post, I was reading something written in the 70s that was talking about like a prototypical New York Post headline, where the headline was like, "World to End Tomorrow, Women and Minorities Hardest Hit." Like that was the publication that you would use to make jokes about liberal media. It was owned by a wealthy heiress, and it was not a great business financially, but was just really influential and published a lot of very left-leaning people. And then Murdoch bought it, and he kind of implied that he would just keep it as that, and then it very much became a completely different publication from that. So yeah, sometimes just the distribution sticks around and the ideology shifts, and if you have a wealthy benefactor, they'll keep it in business even if it's not a great business, because it's just a very high-end form of luxury consumption. So I guess like to aspiring media entrepreneurs, that is that is kind of the lesson here, is that even if your business fails, some extremely wealthy person might buy it from you and then completely ruin it from your perspective, but at least you will get some money out of it, and you will have had a good time, hopefully most of the time, while actually running the company.
We'll get back to the conversation in a moment after a word from our sponsors. If you don't already subscribe to Turpentine's industry-leading newsletters, like our new daily AI newsletter, Emergent Behavior, or Media Empires, you should. But that's not what I'm here to tell you about. The platform we use to power these newsletters is called beehiiv, and it's excellent. First of all, it was started by the same early team who helped build Morning Brew into a $75 million newsletter business. And they built beehiiv to offer that same powerful functionality to anyone sending emails. From essayists to business owners, the platform is beautiful, their text editor is intuitive, and they help you scale your audience with custom growth features. beehiiv has powerful tools to help you monetize your content. You can easily launch paid subscriptions or pursue an advertising model. The beehiiv platform will even connect you to premium brands to sponsor your newsletter. Not only do we use them, but thousands of the top newsletters in the world also use them, like Milk Road, Blockworks, the Lindy newsletter, and so many more. beehiiv's founder hooked up Moment of Zen listeners with a sweet deal. Get 20% off for 3 months with code MOZ. Visit beehiiv.com, that's beehiiv.com, to get started.
Brian Goldberg, who's in one of our group chats, also he runs Bustle. He bought Gawker, and I think tried to revive it in some format, but I think he struggled. Yeah, I haven't seen. I'm dubious on sort of the value of the brand, and I'm dubious that it would have made more sense for him to buy BuzzFeed than just to start a new company from scratch.
Yeah, well, BuzzFeed, it's if you are Vivek rich, it's just not that expensive. Like the current market cap is about 110 million. So, in terms of like eyeballs per dollar, it seems like actually a pretty good deal. Now, the question of how many of those eyeballs will stick around, that's a tougher one. But my guess is that what he might be thinking is that, okay, he's going to buy it. He's going to tell everyone like nothing changes, as you were, continue publishing exactly what you were publishing before. But over time, maybe he plays a big role in recruiting, and maybe that's something you like if your company is bought by some financier who's never been in media other than having a podcast. Like maybe you like that he wants to get involved in the business and wants to understand what's going on, and then he happens to be involved in a lot of these hiring meetings, and he's deciding who to hire, and then you slowly find out that a lot of the growth team came from the Trump 2016 campaign, and yes, they know a whole lot about social media, but yeah, it's a different vibe than it used to be. And maybe there's some attrition on the creative side, but maybe over time that attrition means that the people who cycle in are different from the people who cycled out. And job turnover in media is already pretty high. Stand by for personal news is kind of the default media person tweet. So just through attrition, you could convert BuzzFeed from a more left-leaning to a more right-leaning publication in a couple of years. And you have to, like, if you're thinking about that as a business, if you think that BuzzFeed but right-wing is actually a better business, like as a business, than BuzzFeed in its current state, you do have to think about, okay, how much time are you spending running what you think is a suboptimal business as you wait for it to evolve in the right direction? But I think that if they did that slowly, that probably they'd be able to retain a lot of the tacit knowledge. Like they would know how to make things viral. They would know how to spot emerging viral trends. And it's like a lot of media bias left and right is just it's putting a little bit of a thumb on the scales. Like you don't really have to fabricate news to give people a completely biased view of the world. You just you have a lot of discretion in deciding what is like the gigantic headline that has a giant photo and what is like, minor story that is not on the front page, or like in what case do you say that the story is X happened versus in what case do you think the story is the other side is lashing out over X? Like you can present everything in this more oppositional way without ever, without actually lying to the audience and still giving them like a view of what's going on in the world. It's just a very distorted view of what's going on in the world.
Yeah.
That is just kind of the nature of these things. That's one reason I try to avoid in my newsletter talking about a lot of current event stuff and political stuff is that I think it just makes people dumber. And I think part of the franchise is like the franchise for the diff is that I want it to be a smart publication that smart people read. And so I'm not going to ingest any lead paint. I'm going to avoid any head injuries, and I'm going to avoid having any serious opinions on culture war stuff and political issues, at least within the newsletter.
Yeah. It's interesting. I think the bull. So I do agree with that. And the bull case for Vivek is basically like what Elon did to Twitter. Like he could have started a new Twitter, but the worst case for that is it becomes like a Gab or a Parler or something, just like a right wing. That's kind of what Breitbart is. But it's sort of like the bull case is he is able to make BuzzFeed, what Twitter is to Gab or Parler to Breitbart, be like the better, smarter version of what Breitbart was trying to do. That said, I suspect if people who work at BuzzFeed heard about those plans, this is what I just projected. Vivek hasn't said that these are his plans. I suspect less than 10% of the company would want to stay and support that because I suspect they're all on the left. Though maybe they're more just like opportunist and a job to job. And like, if you're working at BuzzFeed, you're not working the New York Times. Like,
Right.
it's not like, yeah, you make stuff viral, you're not like.
Right. And, BuzzFeed, it did used to have a legitimate news operation that did actually break meaningful stories and things. Like they did that, but that's just a terrible business to be in. Like you want to do that after you have the extremely wealthy benefactor who expects that the return for this business is negative indefinitely. Like you don't really want, like in theory, maybe it's a way to recruit better talent for the listicle part of the business, but my guess is like it's potentially harder to go from listicles at BuzzFeed to breaking news about political scandals at BuzzFeed than it is to go from you broke important political stories at BuzzFeed News and then you got poached by the New York Times.
Yeah, it is interesting. Like when Elon was about to take over Twitter, Paul Graham tweeted at him saying, "Hey, just start a new one. You could recreate the code in a short period of time, and you should just start a new one." And of course, he didn't do that, and people didn't leave Twitter in droves. Like the user numbers didn't go down, and it turns out it's seemingly the right thing to do. Putting aside the valuation of Twitter, but just in terms of the user base. With my personal opinion is that a lot of like for a brand that's different than a social network, and so a like to whatever extent BuzzFeed's has an audience right now, their eyeballs, I think if Vivek were to say, hey, we're now like a more right-wing version of that, I suspect would leave in droves. In the same way that if Elon bought the New York Times, I think it would no longer be the New York Times or Vivek. Like so my humble opinion is that brands are not as defensible. That just eyeballs is not enough. What really makes Twitter work is kind of the graph and the social network. And that is a network effect that is durable versus a brand is not as durable. And thus I think these things are not as durable once the brand promise changes. Once it's like, okay, this was a left-wing thing, now it's a right-wing thing. But that's
like Twitter is a special case. There's a sense in which what they've done is they have sort of created this abstract digital version of the blood feud, and it is just people constantly sniping at each other and then trying to revenge dunk on each other just forever until someone blocks someone. But even then, it's they log into their alt, they post screen caps instead of retweets, and the same thing just continues forever. Like Twitter is a special case. I think there are I think two useful dynamics for thinking about media, one political and one more general. So the more general one is like it is just incredibly hard to move up market, and it is incredibly easy to move down market. So moving down market is just a matter of lowering your standards for telling your readers things that they want to hear. And that's just really, really easy to do. You basically, like if you were trying to take the New York Times and make it much more of a mass market publication, I think part of what you do is just give the New York Times Slack more control over the editorial content, let them provide more red meat for people who are really, really aligned with New York Times values. And they probably, they'd publish some dumber things, they'd publish some, awkward corrections and things, but they would also publish just more viral outrage bait. So that's like it's easy to do that, and it's really hard to take a business that is kind of tabloidy and say we are going to do a long, deeply researched piece on some fairly wonky topic that sophisticated readers will say is the single best explanation they've ever read for that topic. That's really hard to pull off. HuffPo actually tried to do that. So they won a Pulitzer for a 10-part series called Beyond the Battlefields, and they don't publish stuff like that anymore. I think Pulitzer stuff is hard to monetize, and they're much easier things to monetize. I think another issue with moving up market is that the more down market you get in terms of media, the more you are actually kind of a content factory where you just have a pretty good idea of how big a hit something will be, and you have a pretty good sense of what the next thing to publish is. Like if your editorial plan is pretty much based on what's trending on Twitter or Google, you can actually underwrite that content spending with some degree of accuracy. Whereas if you are trying to break a news story on a topic that is kind of wonky and complex, where there's just a lot of background information before any of the major pieces make sense and before anyone's motivations start to make sense, or if it's a piece where you have to do a lot of in-person reporting and flying out to various places to talk to various people to see if there even is a story there, like it's just much tougher to say what the return on investment for that will be. So I would be extremely surprised if BuzzFeed in 10 years under Vivek played the same role in public discourse that, I don't know, National Review in the 1960s did, where it kind of defined like, this is the conservative party line, and here's what's too right-wing to be in good standing with the conservative movement. Here is what is so left-wing that you might as well be a communist, and like here's what all of the major Republicans who are not Rockefeller Republicans should be thinking. That's just really hard to do. So the other piece is on media and politics, and particularly in cases like BuzzFeed is not user-generated content per se, but it is very, very close to that. When you have a political view for your publication, the people who will flock to it first are the people who basically make that viewpoint their entire life, their entire personality, and they tend to be very concerned with purity tests. So, like, I think the probably the most common venue for criticizing libertarians is actually from other libertarians on Twitter saying that like Reason Magazine is selling out, their status now, they are completely abandoning the libertarian vision, or at libertarian events, like the question is always like, who is sufficiently libertarian, who is not libertarian enough. It's just really tough to build coalitions among extremists because they're extreme in part because they don't actually they don't want to be part of a coalition. They just have a different personality type. They really want to be right. And if you try to have a publication that is more open to people on a particular side, people will try to push the limits of that Overton window. They'll shift it over time. And so you end up with something like Gab, where eventually the people who were closer to the center say, I didn't really want to be associated with this kind of thing, and so I'm out. And of course, that means the median user has just moved to the right, and that can keep going for a pretty long time. It turns out that the political spectrum is just wider than we imagined in both directions, and there is always someone who thinks you are not left enough or not right enough for them, no matter how left or right you really are. So it just becomes really, really unstable to try to have that kind of political viewpoint. And for whatever reason, it does seem to happen more on the right than the left, that people just say stuff that is wildly outside the Overton window. I'm not sure how much of that is that there are actually more crazy people on one side than another. I'm not sure how much is like, more, there's like more or less acceptance for that. Like Jacobin had a diagram of a guillotine, like an IKEA style instruction manual for that, and that is that's pretty much joking about revolution and mass execution of your political enemies. I would be kind of surprised to see the National Review having, I don't know, a firing squad image on their cover illustrating what they would do to their political enemies. So it's yeah, there's some, I have some uncertainty on exactly why it works out that way, but it does just seem to be the case that it is hard to have an explicitly conservative publication that doesn't drift in some way that the founders did not like.
That makes sense. Staying within private equity, but segueing to a new topic, why are employees getting equity?
Yeah. So this has been a kind of surprising trend where PE firms they're supposed to be these sort of Wall Street apex predators and really good financial engineers. They're buying companies they're buying companies cheap. They're using a lot of leverage. They're doing clever things with dividends to extract as much capital as possible. They're flipping them back to the public markets at opportunistic times. And that's part of where they make their money. And I think that was probably pretty much the PE model when it started, that in corporate America in the 1970s traded like 1970s, early 80s, average PEs were still in the single digits. So and a lot of companies were just not run especially well. Like the private sector did not at that point have its pick of all the talent out there. There were still a lot of people going into other domains. And so in a lot of cases, you could find a company where it's cheap, you can buy it. You can cut some costs. That usually involves firing some people. You can use a lot of leverage, and then you can sell it in not too long. So there was this crazy deal in the early 80s for Gibson Greetings, where I think they got bought for $80 million, and of that, 79 million was borrowed, 1 million was equity, and then they sold for, I want to say, like $250 million 16 months later. And so that most of that upside, like all that upside, accrues basically to the equity holders. So that was just a crazy deal, and they got a lot of leverage, and they bought something really cheap and then sold it at a more reasonable price and made out really well. But now it's just harder to find stuff that is incredibly cheap, and it's not incredibly cheap for an incredibly good reason. So private equity has shifted from this model of maximal leverage all the time to actually thinking about how to operate these businesses well, and thinking less about, okay, how do we lever this up maximally, and more about, okay, what is actually the optimal capital structure for this company? And you could imagine being an activist investor who buys into this company and says, okay, you should pay back some of these bonds, you should issue convertible bonds instead, you should cut your dividend, do a buyback, or vice versa. But sometimes it's just more straightforward to buy the whole thing and then come up with a new financial structure after that. And when you're coming up with a financial structure, part of what you're doing is trying to raise the right capital from the right people. So if someone is risk averse and willing to lock up capital for a long time, they would be like a classic lender. If they are pretty risk averse, but they do need liquidity, they should be buying bonds. And if they want to maximize their upside, they should have equity. But also, equity is just a useful tool for motivating people. It is actually ownership in the business, and you do want to distribute that ownership to people such that you give them a really strong incentive to maximize the value of that business. And so I think part of it's this interesting victory of the blue collar over the MBAs, that the MBAs crunched the numbers and realized, wait, actually, the best way to run this particular factory is to make sure that every single worker who can see the assembly line can also has a direct financial incentive to figure out what the inefficiencies are and how to improve them. And that if everyone is actually on the same page, if they all have this same upside, and if the upside has some leverage, but also if it is locked up for a while, then you're not only encouraging people to actually come up with money saving or money making ideas, you're also encouraging them to stick around. And I think that's another factor in private equity deals, is that PE has this reputation, which they partly deserve, for buying companies and firing a lot of people. That is often when you say a company is mismanaged or you say it's inefficient, what you mean is they could be doing the same work with a much smaller headcount. And so people tend to get nervous when a PE firm buys the company they work for, and some of those people will leave. And in some cases, it's like the attrition that the PE firm wanted. They're happy for people to quit and not get severance. But in some cases, it's really bad. These are load bearing people who know how the business works, or they have good relationships with their customers, or they have a lot of technical expertise. There are a lot of reasons you might want to keep them around, and one way to keep them around is have some fraction of their compensation in this illiquid deferred format, where if they stay at the company, they know how their investment is doing and they can increase its value. If they leave, maybe they get some cash at the IPO, but by then they have no idea what's going on at the company, and it switches to from more of a savings vehicle to a lottery ticket. So I think it is just it's a clever way to do that, and maybe what it means is that equity compensation is actually still underrated. That despite a lot of criticisms of big tech companies giving out lots of stock options, and actually I think probably the mid-sized tech companies are the biggest offenders. There are just a lot of companies out there that have a really impressive free cash flow number because they are paying a lot of their workers in equity instead of cash, and so they're getting cash from the exercise of those options. They are not paying cash in the form of salary, so their free cash flow looks good, and then free cash flow per share is not really growing very fast because the share count is rocketing up. So like there are definitely cases of questionable equity compensation, but it's also just a really good way to get people thinking about what is the best thing to do for this business rather than what is the best thing to do for me. And so it is, it's a nice capitalist story about workers owning the means of production.
Yes, as they should. I'm just kidding. So, are you more bullish on this sort of thinking that AI raises the value of word cells relative to engineers and developers, or what is your thought on the how the playing field changes? Because right now, word cells are out of luck, relatively speaking.
Um, I think that's not the right divide. I think the right divide is that it is AI is really, really good for people who ask good questions and really bad news for people whose value is entirely in giving really good answers. That if you are automating a lot of the answering stuff, you are eliminating you're eliminating subcategories of jobs, or like you're eliminating parts of the work that some people do. And if that's the main value that they add is just having a lot of information on hand, then that's not good. But if the main value that they have is that they have memorized a lot of information and just have in their head a very complicated model of whatever the thing they're working on is, whether it is a software project or a deal or a trade or whatever else, like if they have a really comprehensive model in their head, then they actually have a head start at asking the AI tools the right questions and in potentially building or customizing the right tools for the exact use case they have. I don't know if that shakes out better for programmers or for lawyers or bankers or whoever else. That's very uncertain to me, because I think to know that, you just have to know a lot about the exact nature of the job. Like, what are the precise bottlenecks? How much of your time do you spend searching for information versus how much time you spend kind of contemplating that information? And in a role where you spend a lot of time searching for information, and that's the fundamental bottleneck, then I think AI radically increases your productivity, also radically increases the variance of productivity between different people. So like I have not practiced law. I don't know very many lawyers, so I don't know how much time they actually spend just looking up case law, looking up the details of the things they need to know. But to the extent that that's a major feature of their day job, then being able to do that in seconds rather than hours is a superpower. But it also actually raises the value of the more principles based knowledge and just analytical ability, because if you have the ability to find the relevant citation for every single claim you want to make, then you need more judgment about whether or not that is actually the citation you'd want to make. And if everyone is able to crank out longer and more elaborate contracts, then there is actually more value in having good judgment about what should be in the contract and what should not be in the contract, and what's worth negotiating over, what's worth not negotiating over. It's even hard, like within a job, it seems like there are people, like within programmers, there are people who have just a lot of information at hand. They know exactly what they're trying to do and what the way to do that is. And then there are people who spend a lot of time just googling, like used to spend a lot of time googling stuff, looking at Stack Overflow answers, tweaking those, and running the code, who are now spending more time with ChatGPT doing the same thing. But though it doesn't, I don't know how big the productivity gap between the two is. Like, it at one level, trying to just never use tools like that are just easy references for the specific thing you're trying to figure out. At one level, that's just showing off. At another level, it is just a great intellectual achievement that you don't need the reference material because it's all already in your head.
That makes sense. I want to segue to something else you wrote, which was about FTX and how seemingly complicated running a fraud operation can
Yeah.
be, and maybe they don't deserve get the credit they deserve for the competence it takes to do fraud at that scale. I'm half joking, but when you unpack that.
Yeah. So there's this FTX bankruptcy examiner's report that came out I guess like a week or two ago, or at least that's when I saw it. And it is like this beautiful, understated, comedic masterpiece about white collar crime, because the basic thrust of it is FTX was just a madhouse. Nobody knew what they were doing. And there's this consistent pattern where someone will join the company. They will realize after a couple months that something weird is up. It's actually like a whole variety of different things. Like one person was worried about people insider trading on the platform. Someone else was worried about money laundering. Someone else was worried about the commingling funds, which is what ultimately did them in. But like a lot of people would join FTX, immediately realize there were problems, and bring those problems to their boss. And then what happened in I think all the cases that the bankruptcy examiner talks about is this person got a check. FTX just figured out what the dollar value was of not having any more complaints about that particular thing. And the check sizes vary a lot, which makes me think that people had varying abilities to negotiate really, really favorable settlements for them. And this is one of the funnier parts, there was one person who was actually not at FTX. He was an outside whistleblower. He found something weird they were doing. He emailed them about it, and he had a law firm. So what they did was they hired his law firm, and the bankruptcy examiner says that the only legal work that the law firm ever produced was the engagement letter saying, yes, we're working for FTX now, and here's how much we're charging. That's literally all the legal work that they did. They got paid very well for that. And what it reminded me of was two things. One was there was a Slate Star Codex piece a while ago about why oppositionally minded political groups tend to just devolve into chaos. And he draws this analogy to the paradox that there's this inverted U-shaped relationship between the size of a mammal and how likely it is to die of cancer. So tiny creatures like mice almost never get cancer. There just aren't enough cells for there to be a high statistical probability of a mutation that kills them. And then when you get to humans, like we do get cancer, we are big, our cells are dividing all the time, and eventually something goes wrong somewhere and something starts dividing uncontrollably. But then whales don't really get cancer. But it turns out they do. What happens though is their cancer gets cancer. They will develop a tumor, and then some part of that tumor and the tumor, like it is a living thing. It's a very creepy living thing, but it has a circulatory system. It needs nutrients, and it grows at some pace that is fast enough that it grows to, large enough to, in the case of a human, eventually kill them, but doesn't grow so fast that it alarms the immune system. And also doesn't grow so fast that it just outstrips the available resources and starves to death. But if the tumor gets big enough in a whale, it can eventually have a mutation within it and grow a more aggressive tumor within the original tumor. That tumor is aggressive enough to kill the original tumor, but then it is so aggressive that it can't build all of the support stuff around it that it needs to actually thrive. And so the tumor kills its tumor host and then dies. And this kind of thing happens if you have just a really, really argumentative group that is trying to accomplish something, is that as they get more and more successful, the intrinsic low trust and argumentativeness of the members eventually means that they fight some kind of really pointless internal civil war and fragment, and now they're a smaller organization that can't get anything done, or there's several smaller organizations that can't get anything done and all hate each other. So I think FTX is kind of an example of that, where they were committing fraud, and then they were cutting a lot of corners and committing fraud, and then that ended up selecting for an employee base that was willing to do that, not just to their customers and counterparties, but also to FTX itself. The report also talks about how a ton of FTX employees were withdrawing lots of money right before the collapse, which it does make me think that it also selected for people who were just very risk tolerant and just did not think too much about the tail risk scenario. Like, if you think this is a fraud, but it's making money now, like, what do you do that does not end up indicating that you were completely complicit in every bad thing they did? And keeping all of your money in FTX for as long as possible, and then withdrawing it before it's publicly known that it's collapsing, but at the point where internally it's pretty clear that that's going to happen, is like exactly the way to make sure that you don't see any of that money ever, unless you testify against the right people. Well, and I guess, that you can kind of assume that. I have no idea how much people who cooperated actually kept. And I'm like, if I were on either side of those negotiations, I would also want that to be a secret. So I'm generalizing. I could be totally wrong there, but my guess is like the people to the extent that anyone profited from this within FTX, it was probably someone who timed their whistleblowing really, really effectively and revealed the right information to the right people at the right times. But even then, could be the case that none of them really kept anything. It's just some of them will get less jail time than others.
Yeah, makes sense. I want to segue to something you wrote about as it relates to ads and AI, and then you also talked about kind of AI and search more broadly.
Yeah. Yeah, so I am generally of the opinion that AI will inevitably be monetized mostly through ads. Ads are just a really good tool for monetizing information tools in general. Like when you have some tool that is for gathering information for any purpose, the tool is also a way to read your customers' minds and know what intentions they have. And sometimes those intentions are more commercial, and it is very, very lucrative to put an ad for a particular product right in front of someone who you are highly confident is going to want to buy that exact product. AI also has the advantage that the AI can actually steer the conversation. I don't know, the mechanics of this will potentially be tricky, but you could sort of think of when you're building a model and you're predicting the next token, one factor in that prediction can be, does this token steer the user towards more or less lucrative things? And another factor can be, do the more or less lucrative directions this conversation can go in turn off that user and make them think that the AI is just manipulating them into buying stuff? And that balance is going to be different for different people. It'll be different for different contexts, but in general, there will be some healthy balance where if you are searching for some category where there are like 20 good answers for your question, where should I get lunch in downtown Austin today? If there are lots and lots of good answers, but your AI tool is not going to give you every single answer and not going to rank them and score them, et cetera, maybe one of the factors in which of those good options, which 3 to 5 of those good options they show you, maybe one of the factors is who's bidding for it. I think that's like uncomfortable to a lot of people, but also it's one of the really nice things about that from an economics perspective is that it costs money to generate these AI answers. The marginal cost of a page view is going to be a lot higher in this context than if the content is mostly static, especially if it's mostly static text content. And so you actually want to figure out what the marginal revenue from using AI versus not using AI is before you decide whether or not to use it. And with ads, you can do that in a very, very fine-grained way, especially if you are running these ads and people are bidding in some auction model for it. There could be a point at which the bid from a particular category of advertiser in a particular category of product-related search gets high enough that it now justifies using AI to generate an answer instead of generating a static answer, or instead of displaying a static answer that's already been generated. So that's what that would mean is that the people who monetize AI through advertising will be the ones who are using it in more context, because they will have a much closer sense of when it makes sense, like when it makes financial sense to do this. So they can deploy it a lot faster. They can also avoid the problem of over deploying it, where you have some model that's really expensive, like your users are all very expensive for you, and you just want to gather a bunch of users and figure out the economics later. That is a trap some companies fall into, especially if they are just reselling API calls at a discount in order to generate something that looks like ARR, but is not going to recover. Is not actually going to recur at a sustainable pricing system. So yeah, my guess is like the economic pressure to monetize as much search as possible through ads is going to be absolutely immense. It'll be hard to resist. Google is already apparently testing this out. At least there are screenshots floating around of this. And I think that it's going to be hard to match that monetization over time, because you can always push the conversation towards what is the thing that maximizes just the present value of this relationship with this user over an indefinite future. And subscriptions, they maximize present value in some ways, but they just aren't as precise as that.
That makes sense. And for people who take the sort of alternative view to what you take in terms of they think another business model will reign over ads, what do you think is the strongest argument for that?
The strongest is that I don't want this, and nobody really wants, like, although we're all, I think every reasonable person should always be weighing these two factors in their head. One of which is we just it's less convenient to consume ad-supported content. You know that not only is your experience being interrupted by ads, but also the content you see is going to be shaped by commercial considerations as well as just the, like product considerations, or in the case of media, content considerations, like what is the right thing to say, what truths do our readers need to get, like that matters, but also what truths do they need to get that will not cost us a lot of advertiser dollars is something that matters for building a sustainable media enterprise. And so yeah, ads distort things. There is really no way to avoid that. And once you have some ads, there is typically an incentive to increase ad load right up to the point where user tolerance has been exhausted. And we see this in pretty much every product that used to be free and became ad supported, is that over time the ads get more prominent. But the other side of this is, as companies get more and more data about your behavior, the ads actually tend to get better. I'm like, for my case, I just don't have a lot of commercial intent generally. I just don't buy a lot of stuff. And so it's not that useful to run ads for me. So my ads personally are generally not great, but there are sometimes some pretty well targeted ads. And just as there's more data on what your interests are and what purchases your peers have made and what they thought of those purchases, it just becomes easier and easier to show you an ad that you will actually click on to buy something you would actually want to have. So I sort of, to the extent that that ads have to exist, and it's just hard for a modern economy not to have a lot of ads, to the extent that they have to exist, I want them to be better, and this is certainly a tool for that. But it is going to make some parts of the experience worse. So yeah, you should generally assume that any product that could be ad supported, if you're enjoying it right now, it will get worse on that particular axis over time. On the other hand, ads are so lucrative that it's going to get better in other ways. Like Google search, people are nostalgic for when Google had almost no ads, but it was also just not as good a search engine, and the internet wasn't as good. And Google actually did play a role in making the internet better in the specific sense that they made it more lucrative to write answers to questions that actual people had, because they put those questions into Google. Google ranks sites based on really how well does it deliver an answer to this query. And once they are delivering just a huge amount of traffic for that in that case, they're creating a financial incentive to create good answers. But once they've done that, then they also start to have an incentive. Like if 10 people have written a good answer to this question, then not all 10 are going to get very many clicks. How do you decide who gets clicks? Well, they're all of pretty similar quality. We might as well auction it off. And if you have an auction model where you're trying to maximize revenue, you are trying to maximize click-throughs. And if you're building a model that is maximizing lifetime value of a customer relationship, then it's not just you want an ad that gets a lot of clicks because it's completely misleading. Like, you want an ad that people will actually be happy that they clicked on. And for Google, just as the internet matures, it becomes less and less common for there to be a true trade-off between monetization and content quality, because in the highly commercial context where you can run a lot of ads and where the ad revenue actually means something, typically everyone who is putting out content of that kind at a sufficiently high quality bar has a marketing budget as well, and some of that marketing budget goes to search ads.
Yeah. That's well articulated. Gearing towards closing here, maybe we'll do our last one. Why don't you talk about science fiction?
There's that famous tweet that the tech founder says, "At last we have built the Torment Nexus," from the famous sci-fi novel "Do Not Build the Torment Nexus." And it's good, it's funny, but what like, just from the perspective of telling a good story, like, well, so there are two. I think there are two perspectives here. One is just, if you're telling a satisfying story, there has to be there's typically a good guy, there's a bad guy. There is some reason that the good guy needs to stop the bad guy. And in science fiction, a very straightforward way to do that is you give the bad guy really cool tools, and the bad guy uses them to do bad things, and then the good guy has to stop them. Maybe the good guy gets cool tools too, but if science fiction authors are constrained, and one of their constraints is that they have a limited number of inventions they can come up with, and maybe they have a limited amount of credulity, reader credulity, that they constrain, then at some point the bad side typically gets cooler toys. So just statistically over time, that is more likely to happen. And then the other one is it is a whole lot easier to ship a new technology by typing words about it into your computer than to ship a new technology by actually building it. So if there is something that is scientifically possible, and we know that it could exist, but no one's made it yet, it is more likely to show up in science fiction first, and then to become a product that people can buy. So Combine those two things, and basically every interesting piece of technology has been a key part of some piece of dystopian science fiction in the past. And that what that means is that there's just not a lot of signal in saying that, this is just like the movie Her, or this is just like, I mean, I guess there is some signal in saying this is just like the Matrix. Like probably if we are all in vats of red goo living in a simulation of 1999, some of us will enjoy it. The 90s were fun, but it's probably not a good thing. But it's also it's not a strong signal, because that's just going to be the case for almost everything. Like, you have to be much more creative than a science fiction writer whose job is to create new fictional worlds, and you also have to ship faster than someone who is shipping words rather than a physical product or rather than a software product. And that's just a tough bet to make. So my general view is you should probably go ahead and build the Torment Nexus. Like, probably the person who called it the Torment Nexus was more biased, and if you describe it accurately and your customers buy it and it improves their lives, then you did a good thing, and the science fiction author is actually like this slight impediment to progress. But I think that also points to is that science fiction used to be, and this is definitely not a point that's original to me, like, used to be more techno-optimistic, now is more techno-pessimistic. And I think a big factor in that was the US winning the Cold War, because you could tell stories about this external technologically advanced threat that is actually beaten by superior technology in a Cold War context. There was also just a lot more technological progress at the time, so it was a lot more feasible that, Russia would invent this super weapon, but America would invent this other super weapon that is a perfect counter to it. And I think when people had this attitude that the US is locked in great power competition with another technologically advanced country, then it made more sense to be rooting for technology, especially because part of the story of World War II was that Russia was just able to mobilize a staggering number of people and was willing to tolerate a staggering number of casualties. So that sets up a nice narrative where the bad guys are less technologically advanced, but there are a whole lot of them. And so you're really, really counting on the scientists and engineers to save the day. And so I guess what that ultimately means is that the rise of China as a world power, while very, very bad in many respects, is very, very good from the perspective of making technology's role in science fiction more positive than negative. That if you write a story where there is some, one side is a stand-in for China, the other side is a stand-in for America, the America side is going to be outnumbered, and so they need to outgun the other side. So the good guys will have the good guns.
That is a inspiring note to end on. Bern, as always, this is a great discussion and exploration into your pieces. And until next week.
Yes, indeed. All right.
Thanks for listening to The Riff. Please go follow and subscribe, give us 5 stars, and check out Bern's excellent newsletter, The Diff, if you haven't already. Hey everyone, Eric here. At Turpentine, we're building the first media outlet for tech people by tech people. We're the network behind the show you're listening to right now. We have a slate of hit shows across a range of topics and industries, from our AI and investing cluster of podcasts to shows that drive the conversation in tech with the most interesting thinkers, founders, investors, and influencers, like Econ 102 with Noah Smith. We're launching new shows every week, and we're looking for industry-leading sponsors. If you think that might be you and your company, email me at eric@turpentine.co. That's ERIK @turpentine.co, and let's partner together.